Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon all. Ira Epstein of Linn & Associates with your metals market update for this Monday, the 18th of September, 2017. We're just getting on to 3 p.m. Central Daylight Time. As you can see, gold and silver hammered today in front of the FOMC meeting, which starts tomorrow, ends on Wednesday. That's one of the events taking place. President Trump speaks at the UN tomorrow. We'll see his speech. I don't know the time of that yet. We also know that North Korea has gotten quiet, so some of the premium has come out of that. We've seen premium come out of the Japanese yen, the bonds, and the notes as well. We're down today in the NASDAQ more than any of the other indices because I guess the Justice Department is doing some looking at Facebook and some of the ads that were run during the election there, wondering what that is. So Facebook's seeing some problems, and that's what took the market well off the highs, but I don't know that that's a fundamental problem for them one way or the other. When we look at the weekly chart of gold, we can see how the market reached up into the 1350 area and is now, we're into the second week of a correction from that spike high. We can also see if we go to an area chart of just closes on a daily basis, you've gone from 1351.20 to wherever you're going to finish today, probably near that 1312 area. There's still a gap on the daily bar chart at 1347 that you have not filled. So when the market reverses itself on whatever the next leg is, I'm going to look at that as one of the potential goals. These are things that I just write down somewhere. I remember them. After these many years, I can remember quite a few of these things that are important to me. And I just keep that on the chart as a note for myself. The trend is down. You've got the pattern of lower highs, lower lows. Do you see that? The market went to the 18-day average of closes on Thursday and Friday, fought its battle there, and it gave up today. So now the question is, does the market reach all the way down for the 100-day average, or what about the Bollinger Band? The Bollinger Band comes in at the 1289.70 level, and that'll lift tonight. So either the market starts fighting a battle right here, that 1320s, or it works its way towards that lower Bollinger Band. Momentum-wise, the market is saying it's probably going for the lower Bollinger Band because you're not oversold. Momentum is still pointing its way down. So the bulls that got caught up here, okay, now the market's coming down. We'll see what the market does later on. There's a whole series of seasonals coming up in the gold that are historical plays that favor the upside. We'll see if they have any traction on the market as well. The one thing I always watch in metals is whenever you have an FOMC meeting with a conference, you don't know what the dollar's going to do. If the dollar's going to get, when a Fed wants to be hawkish, a play to the upside, it's typically not bullish to metals. That's how I view it. And I think you should too. Those are the ways that you look at things like that. Now, if you had a Fed that was, let's say 4 years ago, in a very dovish stance no matter what, you're looking at a meeting where, no, the Fed's not going to take its foot off the pedal. Right now, it's the opposite term. Are they taking the foot off the pedal? Are they going to let the balance sheet run? That's what you're looking at. Today, we're seeing continuation on the GLD. Lower highs, lower lows under the 18-day average. Momentum pointing down. And again, we're not oversold. To get oversold, you have to have readings under 30. When we come to GDX, the ETF, you're already oversold. So here's the condition where the market's in a downtrend, oversold. Is it going to be able to reach towards the 2310 level? That becomes the big question in the market. Now, it sounds like it's far away. It looks like it is. But keep in the back of your mind, you're at 2369. It's all of 50 cents from where it's at. Very possible if the market wants to come there. Do I see on this pattern a lot more than that? I think you got a lot of support between 2310 and 2276 for short covering. There's no reason to get long. In fact, on all the metals, even if you were to rally over Friday's highs on each of them, wouldn't matter. You can go to Thursday's highs. You're not going to change the chart pattern. Yes, you can negate the bearishness, but you can't create a bullish pattern off of what's set here. The gold silver, reverse course, and now the silver's taken a beating compared to the gold market, and all of a sudden you've gone from 74.33 ounces, now you need about 76 ounces to get an ounce of gold. So silver taking its beating, and you see that on the chart that looks even more bearish than the gold. Lower highs, lower lows, momentum pointing down, but good support between 1696.30 and 1699.70. I think professional money, if I were guiding people, I'd say I think that's where the pros are going to step off for a moment and take a look and see what the market is. In the copper market, you're oversold, have been in a downtrend, have hit your downside target. The question is, what does it do next? Can't tell there. Platinum today, I think the professional money was coming out of the market. Lower highs, lower lows, right into the lower Bollinger Band. And yes, get up to the Bollinger Band high, I'm going to say I think the pros coming out. Go to the low, pros coming out. Remember, you only settle outside of those bands 5% of the time. I want to be the house. I want to be in the 95 percentile. When I take a look at the palladium, you made your run for the lower Bollinger Band around Thursday of last week. Now you're coming back up to the 18-day average. You are in an oversold condition that today is the first day where it's looking like you're going to get both numbers that make up the slow stochastic under 20. If we come on this chart back another day, you'll see that both numbers were not that way on Friday. So oversold, that's all that you can say at this juncture. Dollar index, resistance back up at the 18-day average of closes. Frankly, if you take out today's lows of 91.58.5 and don't take out this 92.42, you could end up with a pattern of lower highs and then lower lows all set in for a downtrend. Is there anything on the upside that can turn you bullish? Frankly, no. On this pattern, even if you take out 92.42, you end up with a lower low. So the downside has the possibility of entering the trend, not the upside. I put that all together and I say, okay, what next can the market throw at you? And that's what you try to look at. And one of the things I want to throw your way, Modern Trader magazine. 1 year free subscription to the magazine. How do you get it? Well, let's talk about that in a moment here. Simply put, they put out this magazine every single month, and it's completely redone from what it used to be. If you look at these stories, buy a technical gold play, sell, Chipotle, OCO, more upside, cycles, talking about them, commitment of traders ideas, options, can you get some plays off of that? Then if you take a look and you keep working with it, you're going to see that their technical stories start coming in. Options basics if you want it, but then trading the different types of patterns, summer weather rally, price premium pump, how do you work with all that? The stories are great because they're full of the graphics. You know, when I'm looking, I want to learn. And to me, a story is told by the chart. If I can understand what the author's talking about and see it on the chart, it means I got a pretty good idea of understanding what's going on there. And that's what this magazine's about. It's about teaching you, if you're a trader, different ideas. It does not mean you go out and you use all these ideas, but understanding them is very important because somebody else may do it and you want the knowledge, or you might even open up yourself and say, you know, this is something I should add. I want to see what that does to my trading style. To get all this, it's a $79 value if you go to Modern Trader. Come to us, just call us, go to our website. You'll see a carousel of free offers. It's going to be free. Fill out the forms there. You can fill out the form right through here. If you're watching me on YouTube at any point, you're going to see that we have an icon there. And underneath us as well, it's going to say, click here for Ira's free offers. Do so, and we'll take it the rest of the way with you. I'm Ira Epstein. Thanks for watching, and I'll see you all in my end of the day financial in just a short while. Take care.